Hello. The company being analyzed today is Indegene Ltd. This is a technology company which works with some of the largest pharmaceutical companies like Pfizer and Johnson and many more. So today we're going to analyze Indegene Limited's financials, its growth, what it actually does, and its future outlook. So let's start. First, 13,036 crore company, that is the market cap. So it's I think, a large cap company, mid to large cap company. Current price of one share is 543 rupees. Book value one share is 109 rupees. Book value is assets minus liabilities. Return on equity is a nice 20%, while return on capital employed is a nice 24.8%. Then we move to the profit and loss of the company. We only have data from 2019 here. So in 2019, we have sales, we have operating profit, we have operating profit margin. Pay attention to that. We got profit before tax. We finally got net profit or profit after tax. So in 2019, we had sales of 558 crores. Then we had an explosive 3 years where revenue blew to 1,665 crores in March 2022 or fiscal year 2022. Another nice year, fiscal year 2023, 2,300 crores. But now in the last 2 years, even though fiscal 2023 was nice, the growth has slowed down. In March 2024, 2,590 crores only, and in fiscal year 2025, 2,839 crores of sales. So a bit of slowdown has happened in the last 2 years. So in fiscal year 2025, we had 548 crores of operating profit EBITDA, 19%. You see this 19%? 19% EBITDA margin, 539 crores worth of profit before tax, and finally a 407 crores of profit after tax. Okay. In percentages term, in the last 5 years, company has seen a compounded sales growth of 35% compounded. 3 years, 19% compounded sales growth. TTM, trailing 12 months, for the previous 12 months, only 10%. So there has been a bit of a slowdown. Okay. Last 5 years, compounded profit growth has been an explosive 68%. Last 3 years, 29%. Great. TTM, trailing 12 months, even with 10% sales growth last 12 months, 23% profit growth last 12 months is really, really nice. Even with this massive growth, the company has seen a decline in return on equity. 5 years ago was 28%, 3 years ago 24%, last year was 21%. Okay, that can be a concern. Then, what are these numbers? Cash flows, very, very important. How the company's cash flows. Here we have cash flow from operating activity in March 2019, 65 crores. Then saw explosive growth in March 2022, 297 crores, 297 crores. Massive dip, 130 crores. So some fluctuations, but massive rise again, and 442 crores of cash flow in March 2025. So company is a cash flow positive company, high return equity, high return on capital employed. In ratios, okay, in ratios, look at this one, return on capital employed. You can see it has seen a bit of a decline, okay, like 25% in March 2025, 29% was in last year, 2 years ago, 33%, a few years ago, 46%. So declining return on capital employed, a declining return on equity, despite despite rising profits. So what could be the case? A guess, just a guess, this figure, okay, this figure, return on capital employed, this figure, return on equity, these two figures, their numerator are like operating profits and net profits. Net profits for return on equity, I believe EBITDA for return capital employed. So numerator are these, but the denominator are usually assets minus liabilities for return equity, and return capital employed has assets in the denominator. So it means that their equity, their assets have grown way faster, and liabilities may not have grown that much. So assets minus liabilities, what are net assets were? Net assets, the equity of the company has grown way faster. So that may not be the worst thing if debt is not growing a lot, if they're getting more cash on hand, cash in the bank, but a declining return equity and return capital employed can always be a worry. Now, we operate at the intersection of healthcare and technology. That's what the company is saying. So we have the healthcare and technology capabilities. So Indegene uses its technology capabilities to help healthcare companies. Okay, you can see 23% of its employees have a healthcare background. And in the bottom, you can see this solutions across the life sciences commercialization value chain. Life sciences, as a simply speaking, simply understanding, think of it like drug making companies, biopharma companies. Okay, so across the entire life cycle of biopharma value chain, helping sales marketing, helping patient support, helping complying with regulatory affairs, clinical trials, conducting clinical trials. It helps with all of that. And being even more specific, we have three segments. Okay, we have sales and marketing. Sales and marketing, let me just zoom in a bit. Sales and marketing contributing to around 60% of revenue, not 60%, 68% of revenue from sales and marketing, providing sales and marketing support. Then medical and regulatory affairs support 28% of revenue. And finally, others like R&D and clinical 4%. So what do these three segments actually mean? Who to ask better than ChatGPT? So what does Indegene do, and what are these three segments that we just learned about? So, Indegene is a tech plus healthcare company like a TCS or Infosys for pharmaceutical companies. Okay, its job is to help them market their drugs better, run digital campaigns, handle regulatory paperwork, manage clinical and medical content using data, AI, and automation. So, main business segment. Okay, example. Imagine Pfizer has launched a new cancer drug. Okay, Pfizer, massive company. Instead of sending salespeople to every doctor, Pfizer hires Indegene to create a digital campaign for oncologists across 30 countries, personalize email letters for doctors, track how doctors respond, and run AI-based analytics to see which marketing messages work best. Now, if you're wondering, why are they interacting with doctors? Because doctors have to actually recommend, give prescription of those drugs. The doctors have to see that the drug actually works. So Pfizer, in this example, will hire Indegene to do all of these things, and this comes under their enterprise commercial solutions. We saw that 68% of the revenue. Okay, largest segment. Then we have enterprise operations. This comes at a mix as a mix. For example, okay, automating and managing repetitive processes like regulatory filings, safety reports, medical content. Let's use the example. Novartis. Novartis is a massive pharmaceutical company. I think Ozempic, the weight losing drug, is under them. They have the patent to this. So, example, Novartis needs to file updates with the US FDA organization every time they discover a new side effect for this drug. Normally, to inform FDA, this is done manually, but Indegene builds an AI-powered system to collect data from hospitals, generate regulatory reports automatically, check for compliance errors, and submit them legally, helping pharma companies save time, money, and avoiding mistakes, and staying compliant with strict healthcare regulations. Then, the big one, 20% something of revenue, ish, enterprise medical solutions. For example, GSK, I think this is also a big pharmaceutical company, wants to educate dermatologists about a new eczema treatment. Indegene will design an online training modules for doctors. It will write the medical presentations, the medical reports about the effects of this new treatment, backed by scientific data. Will create videos explaining how the drug works and ensures all content follows medical guidelines and country specific regulations. And finally, enterprise clinical solutions. Example, company like Moderna tests a new vaccine. They run large clinical trials with thousands of patients. Indegene helps them to clean and analyze this data, monitor safety patient, patient safety data, and generate reports for regulators like the FDA. So it seems that all of these tasks, one thing is common. Okay, one thing is common. The biopharma companies, the drug development companies can focus on their core tasks and other things like sales and marketing, complying with rules and regulations, okay, managing clinical trials, writing medical reports and all of that. These all things can be automated and given, okay, given to Indegene, who will do them on its behalf. Fine. So that was, I hope that was easy to understand. I could understand maybe a little bit. Then, large addressable market is underpinned by growing outsourcing and rapid digital adoption. The market opportunity is $135 billion. See, marketing and sales, regulatory medical affairs, you can see $135 billion is a total addressable market. Then 9 to 14% is their growth rate till 2026 in outsourcing operations. So these services are being outsourced. That's why the outsourcing operations. All right. 94% of revenues comes from biopharma companies. So 94% of revenues comes from clients who are biopharma. And medical devices companies, 2.5%. Emerging biotech companies contribute 2.3%. Then life sciences, biopharma, medical devices, all of these come under life sciences, is at an inflection point. Okay, there's a patient cliff. Large number of drugs are coming off patent. There's a margin pressures for the Inflation Reduction Act because in the US, Inflation Reduction Act is trying to reduce the prices of prescription drugs and drug launches because of a lot of patents are coming to an end. Okay, profit and margin pressure is there. So companies, biopharma companies, will be now focus more on efficiency and strategy for commercialization of existing pipelines. So more efficiency, more spending R&D, more clinical trials, all of these need to be conducted, and Indegene, of course, will help them. 9 to 14%, I believe, is the number we are looking at. Again, growth has slowed down a bit for the company though. So, yeah. Oh, sorry, wrong page. Okay. They currently have 70 active clients. They have 40 clients in more than $1 million of revenue. All right. 62% of revenues come from top 20 global pharma companies. Okay. Okay. Then business mix as of quarter one fiscal year 2026. Now, revenues were $88.9 million. You can convert this into rupees, US dollars, with 58.5% revenue coming from enterprise commercial solutions, so sales and marketing, enterprise medical solutions, as we saw earlier in the definitions, explanation, 28% revenues, 10% coming from brand activation, which kind of comes, yeah, it comes under like sales and marketing in one of these explanations, kind of for brands and all, branding and all of that. Not the same, not same, but branding. 94% revenues came from biopharma companies, with 70% of revenues coming from North American market, 27% revenues coming from European market, 0.3% coming from India, very small, 0.3, 2.4% coming from rest of world. The US market, North American market has been experiencing some slowdown, so maybe things will pick up. Let's see. Even then, company has grown slowly, but profitable growth has been shown. Then a lot of revenue concentration because 40% of revenue are coming from the top five customers. Okay. And revenue from top 20 customers has been 78%, though this has been a declining percentage. Yeah, a declining percentage. Okay. And finally, what else? Yeah, active clients has been increasing. A slight dip 70, but management said nothing to be concerned about. This is how business goes. Some clients, their work get done, they will come in some other quarter. So strong growth, 46 clients in fiscal 22, increased 63 in fiscal 24, and 73 clients in fiscal year 25. You can pause and see where the massive amount of clients coming from, how big their size are. We got two clients, more than $25 million. Oh, sorry. Accounts, either accounts. Okay, accounts. Value of accounts. How much money I believe they're getting from accounts. So two clients, more than $25 million. I believe so. That's coming from the account. Then finally, hold up. The latest quarters, 20.2% EBITDA margin, 15% of profit after tax margin they have maintained in the latest quarters. And as of quarter one fiscal year 26, they have 1,728 crores of cash and cash equivalents. They recently did acquire a new company, so this may have declined a bit. And finally, for future growth outlook, okay, strategic initiatives for fiscal year 26. One, They're investing in more management. Like for the enterprise commercial solutions, they're hiring senior talent for data analytics and content. For their enterprise medical solutions, they're onboarding some senior industry leaders. And yes, what else? Looking at mergers and acquisitions. I think Broadpath was a company, I'm not sure, but recently they acquired a company also. So do look into this merger and acquisitions. They're going for more and more mergers and acquisitions. So inorganic growth. This will bring on growth. And finally, this is a new product. Tectonic, not exactly a new product, but a new approach, new services named Tectonic. A new thing. And we will just read about this. We will just read about this. And Tectonic, this new thing, has already generated more than $1 million worth of revenues in quarter one alone. Quarter one generated 8.5 crores worth of revenues. This new product. And what exactly is this new product? Let's take a look. Okay. Okay. Hold on. Tectonic. Yes. So Tectonic is not a single product. It's a strategic initiative to use technology, especially artificial intelligence, to help pharmaceutical companies with high level marketing and commercial content creation. Instead of just executing tasks, it aims to become more creative and strategic partner for clients. You may be wondering that doesn't it already handle Indegene, handle like marketing, commercial content creation? Yes, but here it's saying high level. So it will handle like small commercials, small things of brand sales and marketing. But look at this. Tectonic allows Indegene to capture more upstream work, such as developing marketing strategies and creative concepts that has traditionally been done by specialized advertising agencies, trying to displace or replace specialized advertising agencies for biopharma companies. Then it will boost marketing budgets by expanding Indegene's roles from a service provider to a strategic partner. Tectonic increases the portion of a pharma company's marketing budget that Indegene can access. Okay, so instead of just being a service provider, it's trying to become a partner for them, creating strategies for the clients. And it already, yes, from top 20 customers, $1 million revenue. So that was it. That was Indegene, new products, new initiatives. Big company, I guess, very important in the pharmaceutical industry, already has like a strong position. One last thing I can show is this. See in the profit and loss, look at interest. Look at interest. Interest paid on loans. Let's see how big are these interest payments compared to operating profit. Will the company have any trouble paying off loans? So operating profit is here, and the third line below is the interest. So we go all the way to fiscal year 2025. Yes, 548 crores of 548 crores of operating profit, only 22 crores of interest. It peaked at 49 crores last time. But look at that, 548 crores, 22 crores of interest. It can easily, I believe, easily pay off its loans, has no trouble paying off interest. So maybe that is not a concern for now, that missing out on interest payments. That was it. That was Indegene Limited. Bit of a slowdown in growth, but let's see how the company does in the future. Tectonic does seem like a promising product. So let's see where the company goes on. And I believe they have generated $1 million, right? So if I'm correct, $1 million. Where's my calculator? Yes, $1 million. Let's say it's 8.5 crores. Let's divide this by total sales. Hold up. In quarter one, right? Let's go to quarterly sales. And go to quarterly sales. $8 million. Okay. Quarterly sales, 761 crores. Okay. So 8.5 divided by 761, it contributed to 1.1% of revenue. Why is it significant? Because if they're introducing new things, new strategies, new products, and they are generating a lot of revenue for the company, which means the company has a track record or has shown the history that its new products are actually successful and generating substantial revenue. So 1.1%, I believe this quarter it was generated. Let's see how good this Tectonic product does, and let's see how good Indegene does in the future. And finally, cash flows were really, really nice. Yes, not very nice, but cash flow positive company.